Happy Friday, everybody. It's that time of the week. It's time for the Security Token Show. We're your hosts. I'm Herwig. You can call me Happy if you prefer. And of course, I'm joined by my co-host, Kyle Sonlin. How are you this week?
Herwig, I am great. It's mid-July. We are now well past the halfway point of 2024, and things are looking up across the board in the markets as we've already been heading in that direction the entire year. I cannot wait to dive into another great show.
Absolutely. Despite it being the summer where things typically slow down, this might be a record week of news for the tokenization industry. So we have a lot to get into it. And I know we got Nico waiting. Thankfully, he's joining us this week for the market movement. So let's dive right on it. All righty, we got a lot of big topics, and this week we are joined by Nico Pantelis, who is a partner of Blue Bay Ventures, a very prominent investor in the RWA industry as well as in security token market, the company behind this show. We're always happy to have you because you got great insights into the space, of course. And man, as I said, we got a lot to talk about: equities, real estate, treasuries, Chainlink sandbox, and so much more. Why don't we get into it? Why don't we start out with Bakkt? That's the big news this week I got from them that we talked about previously, how they tokenized NVIDIA shares, their bNDVA tokens, and they actually got rated by Particula, who we're going to have on the show later today. But now they've launched another 5 products behind that: Microsoft, GameStop, Google, Tesla. There's one more. Let me see here. MicroStrategy, a big one. I actually think that one might end up potentially seeing the most action, as we saw, Kyle, previously from our insights on tokenized stocks, that Grayscale at one point was the most popular traded tokenized equity, outperforming, Tesla and many other popular stocks at the time. So very, very interesting choice by Bakkt here. Guys, what are your thoughts? Tokenized equities, the biggest companies in the world, they are coming to market on chain.
Let me start, guys, by congratulating the team over there at Bakkt, Adam and Roberto, doing a fabulous job getting into the market with these kinds of very new and very groundbreaking products. It's that's why we are invested very early in Bakkt from the start on. These guys have the vision to make finance come to blockchains. And these types of products are going to attract a large audience worldwide, because with these types of products, you can go to, let's say, Finance 2.0, where you have not only your stock equivalent on your blockchain and in your wallet, where you can trade them, but you can also DeFi them. So you can lens again them or do other stuff with it, which is at current stage not possible. You can only margin your broker account over there with, let's say, interactive brokers, but it's a margin pool of interactive brokers, and you're in essence the product then. So that's not what you want to see as an owner of these products. You want to trade them and you want to lend them out and stuff like that. And I think even I heard the CEO of Robinhood mention something about that, Herwig, that the blockchain will be the next financial, what did he call it? Let me see. An obvious technology advantage. So yeah, if you see what the guys at Bakkt are putting on chain, this is what it's all about. So I think Bakkt will be a huge partner of all these TradFi organizations in the future. So,
yeah,
congrats, guys.
I had a chance to talk with these guys on Gav Blacksburg, Wolf Financial's Twitter space just last week or the week before. And as any of our listeners know, you better believe that I made them get into the weeds about how these assets are structured. While it's nice to have tokenized stocks, we've seen this game before, and we've seen it done poorly. So I spent a lot of time, I wouldn't say grilling them, because of course I'm supportive and I love to see this development, but I certainly have heard this story before and wanted to understand exactly how these assets are structured. And the way that I understand it is that there is a custodian that does actually buy the real world stock, and then they just essentially lock it up and then issue shares representing the demand here. So it's pretty much what you'd expect. And we see this pretty similarly in the crypto space, right? Wrapping assets. You essentially stake one and you create a token on a different blockchain. The thing I didn't get an answer to is how they manage that float. What if there is outstanding demand that's more than the shares that they currently purchase? Or what if that happens outside of market hours? How do they manage some of these things? That obviously would be too much to answer on a 300, 400, 500 person live stage. But still in questions that I have with respect to some of the details, but it does seem like they're doing this the right way.
I think we can get them hopefully on the show so we can dig into it. They're doing a lot of great content. I know they partnered up with INX too to bring some trading to these products, right? So Chainlink is involved. Perhaps maybe they can help solve for that float proof of reserves type issue that you're kind of bringing up there, Kyle. I think they're doing it all the right way. Makes sense, Nico, why you guys are invested. So great to see just, again, public equities coming to market on chain and soon to DeFi per Nico's point. Next up, I got real estate, folks. A big announcement from Proppy, who mentioned that they now have over 10 billion in homes. It's pretty much 200,000 addresses that have been tokenized through their Proppy Keys platform. You know, we had mentioned this back when it had first launched. Essentially, I assume that most of these have been tokenized to the first degree. There are 3 degrees, the third degree being the one that is fully tokenized essentially through an SPV, sort of accessible to the exposure. The first one is just an NFT of the address. And now they're partnering up with Parcel to bring in the analytics information. Specifically, they're actually even essentially staking Parcel tokens with them in order to get this information and use these analytics to, you know, provide property valuation and presumably come up with this $10 billion home number. So that's great progress. They even mentioned 50 billion is their target by year end. So that's incredible. What do you guys think about this development here?
I am a huge fan of what the team at Proppy is doing, not only because they are active in the Miami tech environment and we're proud to have hosted them at Tokenize This amongst other things, but I have to give them a lot of credit because not only have they been able to drive 200,000 addresses, but to be honest, especially here in a huge real estate hub of Miami, I've heard many real estate agents say that this is not possible, that you're never going to be able to disintermediate this. And I've seen that there are, you know, behind closed doors, there are people that think this can't happen. And yet Proppy doesn't listen to the haters and they just keep driving progress. And there's something to be said about a company that's able to just keep momentum amongst all of that. And they've seen a lot of success, and it's not like there's hate for them, but there's a lot of the incumbents that just necessarily might not recognize the opportunity until it's too late. And so because of Proppy just continuing to move forward step by step by step and doing it the right way, I think is really exciting.
Yeah, what you mentioned, Kyle, the incumbents, it's of course a high margin business and they don't want to mess up their good business. But with this new technology of blockchain, real estate is the first and foremost asset category to get disrupted by this new technology, and it's a perfect fit. And you, from a top-down vision, you can already see that these billions of assets are flying to these blockchains because, yeah, it's perfect. If you can manage and organize and trade and lend out and do all this stuff on blockchains, why wouldn't you? This is a complete new market that you're creating with your current portfolio. So the vision that RWAs will generate billions and billions of online AUM, even into the trillions within a few years. You can see it with this announcement that it's coming, and it's coming quickly. So yeah, it's going to happen. Even like what Carlos from Securitize mentioned, that tokenized treasuries are growing much faster than stable coins at the moment, is a big sign of that. So yeah, it's all coming together, in my opinion.
Real estate, a massive, market, hundreds of trillions globally. And then the debt associated to it, there's a lot to it that's going to get tokenized over time here. Next up, folks, we're heading over to Japan, where there's a movie being produced about post-war Japan called Hero Island. It's actually being produced by Sony. And Philips Securities, they have a Japanese subsidiary that actually is investing in the movie. And they're taking that investment, and it looks like they're going to tokenize so that everyone can become a film producer, if you will, and actually back and produce, this movie Hero Island. So also notably, they're using Securitize Japan. They've been out there for quite a while. So they're continuing to really spread their wings over there. As we know, we've been reporting a very active token ecosystem forming over in Japan. So it's great to see more and more offerings, especially unique ones like this. I'm excited to see, just how much excitement. It's been successful before many times on Kickstarter, where nobody actually gets any kind of royalties or any kind of return from the production. So I think this is really cool to see. You guys think this is super novel, super cool, or more like, very, very, specific and maybe just a little fluff?
No, it's for me, it's an endorsement of this new technology, because it not only gives traditional finance a new avenue, but it also unlocks new ways to get liquidity into elements of our economy which were not possible. You democratize your capital base, in essence, with blockchains. And this is very far-reaching, and you can subsidize or you can finance all kinds of stuff, movies like this announcement, but also intangibles on balance sheets. You name it, and you can finance it, and you can trade it, and you can lend it out and do all these types of things with it. So this perfectly fits this new vision.
Yeah, I agree with that. I think this is a use case we've seen theorized for a while, and I think a lot of people were excited about it as an idea, but we hadn't quite established the use case. There may have been a few that tried to do this, and my memory is letting me down there with respect to what those offerings were. We've certainly covered them on the show in the past. I think there was a Roe v. Wade token, if I remember correctly. Herwig, you can probably call me out on that if not, but it is interesting. I think it makes a lot of sense. The film and movie industry has been struggling this year, so it falls into line that they're looking for other opportunities to capitalize, or in this case, this is based in Japan, and perhaps there are not quite as robust financing opportunities for multinational or international film productions, and yet there's still a huge viewer base. There's still a huge opportunity there, and it's kind of cool. You get your name in the credits, so if you want to be a part of this movie, you can really be an active participant, which is a neat experience as well.
There's a large adoption in Japan for tokenization efforts.
Right.
I heard that a large base of the clientele in INX, for instance, is from Japan. So says it all, in my opinion.
I think movies are such a great use case, not just because, like you're pointing out, Kyle, maybe it's tough to get financing. It's always great to get better terms and more access to capital. But think about how cool this is, right? On one end, you've got the full benefits of marketing. By bringing on all these producers early on, when you're launching your movie and trying to get the word out, you've now got an empowered set of people that are helping promote this movie. You got maybe perks that you can attach to this, right? Movie premieres or early access to content, or maybe even voting on certain potential production elements. It's all possible thanks to tokenization, which is why but
the royalty distribution, it's enormous.
It's
enormous.
Yeah, huge possible returns. But of course, like any business, huge risk of failure as well. Do your own research, everybody. But love to see this. We're going to move on to a slightly less popular, boring product, but more popular, I should say. Of course, treasuries. And we saw a big announcement from Spark, which is actually a sub-DAO of the MakerDAO ecosystem, which is one of the biggest DAOs in the space. And basically, Spark is focused on creating DeFi infrastructure around DAI, part of, again, the MakerDAO ecosystem. And they are also helping now what they call put together a Grand Prix, a race that they have sparked for $1 billion, folks. $1 billion that they say they want to put into essentially treasuries for presumably their own treasury management, which is, of course, a unique feature of RWAs to help bring diversification and stability to a lot of DAO and protocol foundations and other things like that. So I think we're going to keep seeing this trend soar. And not surprisingly at all, the big usual suspects have already jumped on the call, heeded the call, if you will. I'm sure they were maybe even talking beforehand. Of course, BUIDL, and of course, Ondo and Superstate, and many others are already jumping in on the race, if you will. So ultimately, there are judges that are going to help evaluate the different products. But of course, the MakerDAO ecosystem is going to decide ultimately where this goes. So, wow, guys, another billion. We're already at, I think, looking at 3 billion easily, right? By the end of the year, this is now another potential billion. We're starting to see that exponential curve of adoption, I think, folks. What do we think?
Yeah, I mean, it makes total sense. Maker has their stablecoin DAI, and they've consistently been looking for solutions on chain to solve this yield problem. They've owned a lot of different collateralized things in the past, so it just makes total sense that they integrate some of these other solutions. I'm a big fan of the MakerDAO ecosystem just because they really kind of built a financial institution from a decentralized manner, have all kinds of interesting currency controls, and built a decentralized stablecoin DAI that has survived quite a long time in the face of many risks to that ecosystem that we've seen over the years. So I think they've done it the right way, and they really have decentralized in a fascinating manner. And to your point, Herwig, there is just so much demand for U.S. treasuries in the crypto market, and it only is going to grow, I believe, in certainly the short term. That very, very quickly, I think that crypto and stable coins are going to represent a top 10 buyer of U.S. government debt, and that is a wild thing to think about. And again, it points back to the inevitable incentive mechanisms that are going to be in regulators' minds and in the Fed's mind. And with more debt that you own on the balance sheet, the harder and harder that it is to neutralize this opportunity and this innovation. So I think it's a fascinating thing to watch moving forward from a macro perspective.
Yeah. From my side, these DAOs have raised multi-billions over the last 10 years for their development and their chains, and it's just a normal thing if you have billions of dollars in your treasury that you want to de-risk this treasury with distributing these assets to various parts of the asset base. And the more assets that come on chain, the more distribution that will happen to these various assets. So it's a logical evolution. And the first things you've seen, first with Arbitrum and now with these guys, it's with Maker. It will be all of them that will be hooking up on the RWA team in a large way, because RWAs represent not only stable coins and online treasuries, but also tokenized equity, maybe art, maybe other stuff, real estate, land, you name it. It's all coming on chain, people. So yeah.
The risk appetite will continue to grow beyond treasuries products after this first wave of onboarding. Absolutely. And these are crypto foundations and DAOs. Of course, their risk appetite is going to say, hey, we want some more potentially lucrative returns in our portfolio for the treasury as well. So totally get it there. I also think this next piece of news is mega big news. Because it's coming from a $4 trillion asset manager, one of the biggest in the world. Of course, I'm talking about State Street. Who way back when, Kyle, you may remember this, they announced like they're hiring 400 people or something like that. I may be wrong on that number, but it was a huge, huge amount of people. I hope they stuck to it because they look like they're going to need it. They are getting into the stablecoin and tokenized deposit game. Now they did, they invested in Finality back in the day, and they're going to be using that technology as a part of all of this. And they have some great payments infrastructure. But this is part of their plans, right? To bring in, of course, settlement technology and other use cases here. And they, of course, allude to the fact that they're going to eventually tokenize more and more asset classes. They got $4 trillion worth to start exploring already, not to mention, of course, what they continue to bring on. So State Street officially, I'd like to say now with this announcement, really back in the game, commercially getting active in the space, as we've seen many big other banks and asset managers become this year. So yeah, State Street. Kyle, Nico, any thoughts?
For me, this is very important news because State Street has long been pulling up his shoulders, lifting his nose, saying, hey, blockchains, that's not for us. This is for shady people, not the fine people from Wall Street that we are. And State Street, maybe you guys don't know that, but these guys are trailblazers in the TradFi. They were the first ones, or one of the first ones, to launch an ETF product back in the 80s or the 90s. These guys know what's up. So if they smell a new business, they're immediately jumping on it. And this is, for me, next to what Larry Fink with BlackRock has been preaching in the last months, the next big sign that Wall Street is coming to these blockchains, finally.
Yeah, I think it's interesting that they're launching their own stablecoin and what ramifications it's going to have. We've talked about how all of these institutional players have launched their own digital asset platform, from Goldman to JP to Fidelity to every single one. Are they all going to launch tokenized stablecoins? Are they going to do tokenized deposits, which makes total sense for deposits? But at some point, we're going to need to have a deposit to deposit exchange rate. And so if we have our deposits and our own stablecoin, and then someone else's deposits and their own stablecoin, it just kind of creates a little bit of confusion. And we better make sure that all these assets end up pointing back to the real structures, because I don't think this would happen. And hopefully blockchain can help solve for, we've seen how mortgage-backed securities can really confuse and conflate what the underlying asset is, right? And so with CDSs and all these other things as well. So you have these synthetic products that are supposed to point back to $1 in a bank account, but we better make sure that that's actually the case. And the more and more and more of these things that there are, the less standardization we can have across the industry. So I do think that there's one particular attack vector there that we do need to try to do our best to mandate for. I don't think that State Street is necessarily going to be the one that takes advantage of that. But at the same time, you never know until we become over leveraged. So I think that that's the one thing that I'm looking at with each one of these companies releasing their own products here, is I'd probably prefer to have kind of a universal standard for how these things come to market.
That sounds like you're in the camp of we need stablecoin regulation ASAP.
It certainly makes sense.
Prevent that. But State Street, I think we have a pretty safe bet that they're going to do it the right way. But I think that's good feedback for them. They need to do it the right way for everybody to take advantage of this technology fully. And you just can't trust it if you're not going to bring in proof of reserves, if you're not going to bring in these factors, because that's the new on-chain environment we live in. We got one last thing before we got an amazing interview with Particula coming up, which is Chainlink. They announced their sandbox. I don't think this is any surprise. There's been some news, but they have reaffirmed that they are open for business to work with institutions to go from months to days when it comes to their tokenization pilots. So with this kind of news, I expect that we're going to be seeing a lot of different pilot announcements and more asset managers and banks get on board. So I think this is fantastic. Chainlink is obviously a huge critical infrastructure for the RWA industry, everything from NAV, support to proof of reserves that we've been talking about. They don't do the tokenization themselves, but interoperability will play a huge role as we connect ecosystems and potentially have multi-chain tokens and things like that. So, obviously we're big fans over here at Chainlink. Did any of you have any extra comments you wanted to add?
Yeah, for me, this is the missing link, which Carl just mentioned. Are the assets really there? And this is what a third party like a Chainlink can verify and distribute to all these products. Because Indeed, there needs to be a clearing of are these dollars in the bank, are these shares on the balance sheet, are these bonds registered with the operator? Indeed, but if you can do that on a decentralized way, like Chainlink is doing with the CCIP product, then you go full circle, and you can check every detail of the treasury and what's going on chain. There you go.
It's a good point. I also think that the other really key component to a Chainlink partnership is their CCIP protocol. So they have the Chainlink interoperability protocol, which helps, I think, prove our consistent theory here on the show that multi-chain assets are likely the future, but it's not going to be on the issuer to solve that problem. They don't really want to be involved there. And so it's really going to come down to the network of brokers, issuance platforms, and liquidity providers to make sure that there's seamless transfer from blockchain to blockchain. And that's what Chainlink can provide with a network of over 20 blockchains that they support for that exact purpose.
Yes, and from what I want to add on this, on the side of regulation, is that I think the regulators will need to make their own protocol, to put it in this way, on how are assets checked in treasuries or in accounts, and how are these signals distributed on these blockchains. If there's a protocol for that, and all the players like Chainlink and others keep it like that, you have a closed loop from that side, also cleared by government regulators. We're fully on board then to take the complete TradFi world on chain.
I think you're absolutely right. And we get a front row seat. You get to keep watching it here on the show. We got way more news and amazing interview coming up. A few of them, actually. But first, Nico, I want you to end the segment because I did see here in our notes that IXSwap announced some news. I think it's something we knew, but they have reaffirmed your investment and your partnership into IXSwap. Any comments there? Anything you want to mention about why you invested in the firm?
Yeah, again, we want to big shout out to Julian and the team over there in Singapore. They had the vision very early on that RWAs are the perfect product to make DeFi happen on a real scale, let's say it like that, and not on we're shoving tokens to each other and lending them out and saying that this is all fine. No, we need to bring our real world on chain and then start doing this stuff online. So this is the vision of IXSwap, and Julian is doing a very good job with this team.
We love to see it and support it. So that's great news to see. And now, time, finally, let's bring on Timm from Particula.
Hello, everyone. Today we are joined with Timm from Particula. Timm, how are you today?
Yeah, hi, Jason. Good to see you. I'm doing very well. How about yourself?
Doing well myself. Thank you very much. You guys have had a series of announcements, one of which we covered on the show last week or the week before, which is your rating on a bNDVA. That's the tokenized NVIDIA through Bakkt. Tell us a little bit about how you guys got to that rating and the justification behind it.
Yeah, I guess on the one hand side, we had already established contacts to the whole Bakkt team. Yeah, I guess they were in the market for a while now. And we also had established connections to INX, who also had this kind of very well positioning in this kind of issuance, because actually both parties started to partner with each other in order to enable investors for the first time to also get access to Bakkt tokens through liquid secondary markets.
I like it. And tell me a little bit more, on a grander scale, what is Particula's role in this space, for our audience that is getting more acclimated to Particula?
Yeah, for sure. So in general, Particula is an analytics and rating provider for all kinds of asset-backed token, which includes on the one hand side tokenized assets, but on the other hand side also natively issued on-chain products that represent former analog assets. So we are looking at the market. We are a market enabler from our perspective, and we are giving investors the opportunity on the one hand side to really understand the holistic risk return profile of a token investment, and on the other hand side to compensate for the unique product structures in order to reduce their, on the one hand side, due diligence costs, and on the other hand side, opportunity costs. Because the thesis of Particula is that tokenization simply changes all major product features. So you have different valuation mechanisms, you have different fiscal compliance, different regulatory frameworks, different infrastructure. And we can already see how the thesis of Particula is becoming reality in the market when we are now looking at the market and see that, for instance, the bNDVA token from BlackRock, you can get access through various tokens into those investment vehicles. So for investors, it becomes more and more important to really understand the holistic product profile of a token, how tokens are comparing to each other, and also what kind of unique risk components are involved in those issuances in order to mitigate additional risks that are simply not part in traditional offerings.
Interesting. And so I did want to ask, diving a little deeper into that, when you start incorporating blockchain, tokenization, cross-jurisdictional, anything blockchain related, what are some things that specifically Particula feels that are important to, take into consideration that maybe is not as, as considered in traditional markets?
Yeah, so in general, I guess it's critical to understand several metrics. So the Particula rating consists of 4 subscores, which means we are looking at all kinds of legal, but also compliance-related aspects, technology aspects, economic aspects, and for sure, all kinds related to transparency. And I guess it's mostly of the time about very, very simple questions that are hard to answer. So on the one hand side, when we are looking also at the backed offering, for instance, they are covering a really broad blockchain ecosystem. So what's the differences between tokens issued on Ethereum, on Polygon? How can we assess the integration of third-party protocols? More and more tokenized assets are used as collateral, or we are seeing that more and more interactivities are also happening between different providers. And we need to find answers on those questions. And when we are talking to regulators or also traditional investors, they are also concerned about certain aspects like governance. So when we are looking at the different protocols and the ownership structure, they want to understand who's behind, what kind of risks are associated moving certain investment vehicles on chain. Also the potential of a 51 attack, for example, also something that was strongly covered at EthCC in Brussels last week. So there are certain metrics people spend or have to spend more time on, which covers especially the technological part. But on the other hand side, we are seeing product structurings that now came in with cross-border regulations. So it's pretty hard to understand for traditional investors what kind of regulatory frameworks are in place, how they are interacting with each other, and to understand this overall picture and risk profile.
Makes sense to me. It's a lot to take into consideration. Glad that you guys are taking care of that for the industry and adding that value. And speaking of which, we saw a lot of value in you guys and connected a while back. We finally announced a partnership between us. We'd love to get your thoughts on, the value for the industry in terms of us integrating, ratings, risk assessment, visibility, and so forth.
Yeah, from our perspective, I guess it's a long anticipated partnership that we have just released. So on the one hand side, it's pretty good for us to integrate our assessment, our risk ratings, which not only consist on a one-time issuance, but constant monitorings into the STM offerings. I guess you guys have one of the most compelling and also comprehensive market overview in regard to tokenized assets, and putting a lot of effort in, on the one hand side, educating the market, but also enable market for traditional players. And I guess the combination of strong analytics, strong educational prospects, or also educational workshops that you are doing to get people in, to give them a holistic understanding of those investment opportunities, and combine our efforts also across different continents. So we are currently based in Europe, you're based in the United States. Now, since the beginning of this month, we have regulatory frameworks in place in all of Europe. So there are differences, people want to understand it, and we are really looking forward to integrate, on the one hand side, our risk assessment into your applications, and on the other hand side, work together to educate the space and bring more and more liquidity into the market.
Yeah, no, we're super excited to work very closely with you guys. And of course, that comes with increased webinars, events, breaking down some of these ratings for our audience, as well as, again, having them accessible on stm.co, starting with bNDVA. Which brings me to my next question for you, Tim, which would be, what's in the pipeline for Particula? How many additional ratings can we expect to both, see from your end on an announcement basis and available to people, and as well as for us to integrate for STM?
Yeah, so I guess a general market development is that we are seeing, and this was already covered in your news this week and also the last week, we are seeing more and more high quality issuances. And I have the feeling that the market is in a new stage. So in regard to the last month, many people were heads down building products, and now they are going live. They want to attract liquidity. They want to get investor trust. So there are currently many, many rating projects in the pipeline for Particula, which not only covers the issuances of startups that want to get listed on several marketplaces, want to increase their presence, but also very established traditional finance players who are now finally starting to create the necessary offerings, the high quality offerings that other investors would like to see to get the first step into the market. So the pipeline is filled up from our side, and we see a lot of traction, we see a lot of interest, and I guess it only can get better when we have this kind of strong sentiment. Also having players like Goldman Sachs announcing that they are also now going to tokenize 3 more funds until the end of this year. So it's really interesting to see what's up in the next few weeks and months.
All great things happening in the tokenization space this year. And we're excited again to be working with you guys. So no doubt we'll see a lot more Particula news come across our desk here. Tim, for anyone that's looking to access Particula's dashboard or work with you guys, maybe get a rating for their security token, how can people get in contact?
So in general, people can access our dashboard and our assessments over our website. But you can also feel free to reach out directly to the founder team and also the contact formula on our website. If you want to access our analytics, if you want to utilize our ratings or get a rating for your issuance itself. So in general, we are reachable across different channels and more than happy to get in contact with everybody who's currently planning to launch a product, who's already in the market or want to create additional business cases, for instance, automatic listing or delisting in existing marketplaces or equivalent.
Fantastic. Well, that is Timm Reinsdorf for Particula, everyone. Tim, thank you so much for joining us today and giving us some insights.
Thank you very much for having me, Jason. Looking forward to the next time.
Absolutely. Absolutely. And with that, we'll be transitioning to the next section of the show.
All right, do I have a token debrief for you? Apart from the headlines we've already covered on the show, I've got 16 more announcements to cover on the space. So I'll try to do it succinctly as possible for you. We're going to kick it off with offerings and listings, starting with Blockstream's plans for a second mining node token offering here, with the first being so successful. And that's proving the case for this new one, which has already raised over $2.6 million in just 24 hours. And next up, we saw MOCHAX announce it's tokenizing its own equity using Tokeny. MOCHAX is a digital asset management firm, so naturally, they are comfortable with the technology, I assume. And Oxbridge RE is also bringing tokenized reinsurance contracts to market using Zoniqx's technology, in case you're interested in that asset class. And the same platform, Zoniqx, is also powering Verity 1, which announced this week is bringing to market tokenized environmental credits. It's also worth mentioning that asset management firm 21 Oaks Capital will soon be launching tokenized investment products as well, thanks to their use of Token Forge to bring them to market. We'll let you know when we learn more there. Finally, Arca is also coming to the securitized markets ATS with their treasury fund. They say it marks the first time that shares in a closed-ended fund listed on a FINRA-registered alternative trading system can be transferred peer-to-peer, as well as purchased and redeemed through the fund. Next, let's switch gears to some fundraisers. Big news from JPM-backed Partior, which raised over 60 million folks in a Series B funding round to help it grow its global payment and settlement solution. And prominent firm Morgan Creek also announced plans for a $500 million new fund. The venture capital firm, which helps expand the company's footprint also globally with this new size. will follow their original thesis to invest in early stage companies, which is their ABCD model: AI, blockchain, chips, and data. And wow, do we have a lot of platform announcements as well. First, we saw crypto firm XBTO enter the tokenization foray, announcing they've already actually supported some tokenization transactions, including the Bermudair bond with Obligate. So welcome XBTO to the industry. And Swiss marketplace Actionariat announced a shift in their product direction, focusing on blockchain-affine companies, knowing that firms who use blockchain in their business will stand to benefit the most from tokenization in the future. Assetera is also waiving listing fees, folks, a few more weeks. So if you're looking to issue and list RWAs in Europe on this regulated platform, check them out while there is still time. And last week, we also didn't get a chance to report that Polybit is coming for the real estate tokenization market powered by DigiShares. So that's exciting stuff, and welcome them to the space as well. All the way over in Singapore, MAS licensed Shintai announced the net zero exchange marketplace that's specifically focused for tokenized climate tech and sustainability projects. And in the US, Equity Shift made a big announcement. They've got over $6 billion in assets on their platform and distributed over $300 million in ownership. Those are big numbers. Finally, in Japan, the Currents DCP's DCJPY has started their tokenized deposits test. So their platform is obviously focused on that. And the firm is backed by MUFG, SBI, and many others. So this could be put into commercial use soon afterwards. And to close this week, we saw Moody's join in on the fun at Project Guardian. At this point, we have to ask ourselves, though, who isn't involved in Project Guardian, which, of course, has numerous trials around blockchain for capital markets being held under the support of Singapore's MAS regulator. And whew, that's it. But don't go anywhere. We've got some updates for you to hear directly from SteelWave.
This week, we have Mitch DeRaimondo from SteelWave Digital joining us once again on the Security Tokens Show. Mitch, how are you today?
Great. Thank you so much for having me. I love being back.
Absolutely. So, you've been on the show before. You spoke at Tokenized 2024. And one of the big topics that you've touched on is a $500 million fund that you guys are working on. And so wanted to ask, what's the update there? How's that coming along? And what are you hoping to accomplish through this fund?
We're in the deployment phase. We're actively raising. We're still deploying. We're looking at deals. Overall, what I would say is it's super exciting. This is some of the best real estate opportunity I've ever seen, most of the people in SteelWave have ever seen before. So from a buying perspective, it's perfect. From a fundraising perspective, we're being strategic. We're trying to partner up with long-term partners here and really be the backbone of kind of the real world assets that are coming into the space. Our goal here is to really supply, Web 3.0, tokenization, the whole crypto movement with a, asset-backed, investment vehicle that has some of the best opportunity we've seen for the last 40 years being in the space. So we're really excited about it.
Good to know. So you guys come from a more traditional real estate background, diving into this space, taking advantage of the technology, and really applying it to what you guys know best, that industry. But with that said, you guys are also going to Bitcoin 2024. Tell me a little bit more about, what is a tokenized securities issuer doing at a crypto conference?
I think the space has changed a lot since I got involved in it. What we're starting to see is, ex-President Trump is speaking, all the regulators are going to be there. It is a big political movement now that at the end of the day, we really want to be on the forefront of, but supplying the assets that actually could backbone the whole industry. For us, we see it as it's in its still early stages, but now regulators, political figures, institutional capital are starting to care. And the reason they are is because they're starting to be investments that they want. And for us, with our fund and a couple of deals that we're starting to look at, we're excited to be supplying that. So going to Bitcoin Nashville, I never thought I would be, speaking at an event like this, but we're super excited about it. I went to Bitcoin Miami back in the day. It was amazing, and now to be involved in this from, the other side of the curtain, it's super exciting.
That's really cool. Yeah, I mean, look, to your point, there's a lot of convergence going on in both crypto and TradFi, usually through security tokens and these platforms, institutions as well, to your point, as well as regulation. So lots of good stuff there. Are there any specific, roles or types of people that you're looking to meet at Bitcoin 2024 in Nashville?
At the end of the day, we're really looking to provide liquidity to the space through our assets, right? So we want a long-term partner that's going to come in and go, all right, we see the verticals, we understand this. We know that at the end of the day, this whole tokenization space is still very early, but we want to be on the forefront of it. And we want to supply the best hard assets in the space. So that's really the strategic partner we want to shoot for here, and how we're positioning ourselves. I'm excited to be speaking. I'll be on a panel, but our whole team will be at the event, and it's really about getting immersed into the space. I think at the end of the day, SteelWave has been an old brand that's been around forever, that's super excited about it. But we want to make sure that the current Web 3.0 crypto space understands that, traditional groups like ourselves are starting to look, and they're starting to see, and they want to be first movers. So it's just immersing us and getting the brand on the forefront of everyone's mind.
Makes sense to me, right? You got to be surrounded by the people in the industry, get your name out there, and you're going to be on stage. So in front of a lot of people.
Excited about that. Yeah,
So
it'll be, it's a step up. It's cool because back in the day, this was kind of what sparked our whole mind. I went to Bitcoin Miami 2020, and in going there, I was like, if we could supply real estate to these people, it would be a complete mover. And that's really what we're trying to do now. And we're super excited about it. And to be, I guess, one of the few people that actually has a product pipeline behind us, it's definitely supplying a lot of interesting conversations that I never thought we would have had before. So it's great. We're really excited.
Well, that's really exciting and fascinating. Obviously, having those eyeballs on you. And based on those conversations, by the way, are there any trends that you're seeing in this market of tokenized real estate, or where do you see it going in the next, say, 5 years?
From our perspective, we see this as the first inning of a long game, right? But the only way to make it strategic for everyone involved is to have really good assets that back that first layer, right? So for us, over 5 years, I think it's going to grow. I think the secondary market's going to get there. I think at the end of the day, primary issuance will start to be a thing. And that's what we're really excited about. But in order for that to happen, there needs to be, a first mover, which we're trying to really be, but at scale. For us, we're looking at, it's $500 million fund. The deals we're looking at are somewhere between $100 to $200 million, right? We're doing all equity. So these are big positions we're taking. We'll put debt on it down the line, but 500 million sounds like a big number in any other market, but in real estate, it's really not. It's kind of step one. And that's where we want to introduce people to it early, get them with something they're familiar with, and then scale. So I guess that's really where we are right now.
Got it. And these are big tickets, in terms of, compared to other deals that we've seen in the tokenization space. So, keeping that in mind, obviously you kind of needed to fill this offering, but at the same time, how will you then provide maybe more fractionalized opportunities / liquidity options for people that want to get in on this?
We're super open to anything that's come down the pipeline. Our executive team, specifically Barry, is really open-minded to seeing this as the future of markets, right? Opening up the global markets, bringing in retail investors, supplying that super great product pipeline. But it's a couple steps down the line, right? You need to get a product in place first in which you own. Then you can start to piece it out to your retail. So look, I think at the end of the day, we're looking for our strategic partners to make that happen. And I don't necessarily think it's going to happen overnight. I think it'll be 12 to 18 months. I think a lot of regulation needs to come in. I think people need to understand what that means, and then to kind of go from there and build. It will take some time, but we're excited to be on the forefront of it.
Very cool. Well, there's a lot going on right now, and especially this year, 2024, with BlackRock and all the other incumbents kind of jumping in and really acting as a catalyst. I'm excited to see what's going to happen for the rest of the year and years to come. But with partnerships, in mind, how can people get in touch with you to maybe meet up if they're going to be in Nashville as well, or to, talk to you about SteelWave / partnering up with you?
Our whole team will be in Nashville. So we have, profiles on the app, reach out. We're scheduling meetings as we speak. But overall, go to our website. Our website not only breaks down what we're doing on the digital side, but our portfolio. Because when people see the real estate that we're pitching, it's not normal real estate. It's stuff that people want to go to, people want to work in. And the only way to see that is to look at pictures. So the website, Twitter, Instagram, we have a bunch of great articles out. So just look us up online. We're always around.
Perfect. Well, that's Mitch DiRaimondo, everyone, from SteelWave Digital. Mitch, thank you for joining us.
Thank you so much for having me.
Absolutely. And we will go on to the next section of the show.
Cheers.
Cheers.
Kyle, what a week. My God, that was so much news to get through. And it was all pretty incredible. Lots of big initiatives, lots of new issuances. We got some great interviews. That means we have a very difficult decision, don't we? Because we have to pick one of those companies that we thought made the biggest moves in the space, the company that we thought deserves the spotlight for what they did. And it, of course, puts them in the running for Company of the Year. Kyle, a pretty coveted award.
That's right. Yeah, no, I recently, just a couple hours ago, got off a call with Jamie Dimon, who was fascinated to hear early stage insights into our Company of the Week choices. But I told him, Jamie, look, we appreciate the work that you're doing in the industry, but you're going to have to watch it live, just like everyone else.
No one gets early access. If only that were true, but it would be the case. It would be the case. So Kyle, now that the moment is finally here, who'd you pick?
Well, my winner this week is Blockstream. Blockstream, if you don't know, has been a super active Bitcoin company for such a long time. They are a huge miner. They're a huge advocate for the technology. They've done all kinds of crazy things. They've launched Bitcoin satellites that transmit the blockchain. They've done all kinds of crazy things. But what they also have done is they issued the Blockstream mining note, which was essentially like a debt instrument, where it was a 3-year term where you essentially purchased hashing power that then would mine Bitcoin. So you'd be exposed to the Bitcoin that was produced as well as the price appreciation. And because you're buying the mining power, you're going to get a better price on the Bitcoin than buying it off the market. It's almost like investing in a gold mine and then selling the gold and getting those returns. You're going to be able to get it for cheaper than if you were to pay for the direct gold bars themselves. And it looks like that's the case. They raised over $50 million in multiple tranches for their BMN1 instrument. This was the first issuance of their Blockstream mining note, which was really successful. They were able to successfully drive a over 100% return over 3 years, which is a great IRR, as well as it gave you a 32% additional yield to the actual price of Bitcoin. So you got 32% more Bitcoin or yield on your investment than if you were to have just bought the Bitcoin itself. So you got more Bitcoin exposure and just that general investment from 2021 to 2024, net over 100% return in that 3 years. It also trades on multiple ATSs. But the reason that they're winning my Company of the Week is they're announcing BMN2 is about to start fundraising. If you are a previous shareholder of the BMN1 token, you actually get a bonus of additional shares of BMN2 if you participate. And it was so successful that they're going to be bringing a second product to market. So that's really exciting because they've done such a good job previously. They work with STOKR Arnab and the team there are friends of the show, and it's really exciting to see that they are moving forward with their experiment. It was so successful that they're going to bring it back.
Love that, love that, love that, Kyle. A phenomenal company leading the charge in innovation, bringing in Bitcoin in a tokenized form in an investable manner, I think is awesome. So successful, of course, that they're doing it again. And I love the fact that they're giving a bonus to the previous investors. These are the kind of perks and features we're going to start to see more and more in this new on-chain RWA world. So Kyle, great choice. Absolutely love that.
Yeah, so excited for them, and hopefully we'll be hearing from them here on the show sometime soon. But Herwig, over to you. Who's your winner?
Yeah, I think we'll see if we can get them on next week. But my winner, Kyle, is a very well-known company in the crypto space. Again, that was a tough week to pick from this week, but I want to shine a light on Chainlink's new sandbox because this to me marks Chainlink's big move into tokenization. They're focusing on bond workflows. They obviously already have a huge institutional reach. They've been doing a lot of great stuff in the RWA space, as we discussed earlier on the show. But as they say, going from months to days, offering a solution, a safe sandbox environment for what I believe financial institutions are looking for to really get started. And I didn't see any sort of, brand name partners that are providing any kind of, technology within it. So this to me tells me that Chainlink is going fully all in on RWAs, and we're going to hopefully start to see potentially some of these pilots, at least information. But it's going to create the environment for them to eventually commercialize and bring products to market. So anyone who's speeding that up, and Chainlink is a great position to do that. They got Chainlink Labs that's going to help people support that with the consulting and help with sort of the technology, et cetera. So to me, this is a slam dunk, a winner for the industry, and I hope their sandbox sees a lot of success. Kyle, Chainlink, you're my company of the week.
Great choice. Chainlink has been so active in traditional crypto, in bringing traditional finance into traditional crypto. It only makes sense that they're also going to liaise the not only crypto markets and the security token markets, but also TradFi into security tokens as well.
Absolutely, Colin. That's our show this week. What a show. I'm already excited for the next one with this much happening in the space. I'm sure we've got amazing more news to cover next week. And in the meantime, while you wait for that, of course, stm.co. That's where you got to go for all your token information. We got the latest trading data. We're adding new listings every day, nearly a new report every week. As well as a lot of great newsletters and content to go check out. So please tap in and like and subscribe. Give us a share. We're really trying to help you bring the greatest content in the RW space every week. So your support truly helps make that possible. Kyle, any closing thoughts?
Hey, thanks everybody for tuning in. As always, we really appreciate it. If you want to learn more, you can find information on stn.co. You can check out our YouTube channel now with 245 episodes of podcast clips and news, or 244, I think it is this week. But you can find all that information, as well as we published a book on the industry on Amazon, Blockchain Explained. And so if there's anything that you prefer from a medium to read and learn more content, you're going to find it, all thanks to Security Token Market.
Somebody was just telling me how much they were enjoying reading it, learning about the true infrastructure by detail, if you want to check it out. But Kyle, I'm excited to see you again next week. With that, you know what I'm going to say, everybody, happy tokenizing.